what I'll be talking about today is what I consider the missing piece of the trading puzzle for many people. It's delta. And today I'm going to walk you through what order flow delta is. To me, it's the best kept trading secret. I hate to call it a trading secret because it's information that's available to everybody, but not everybody uses it. Very, very few people use it when you consider, the whole global trading sphere. And you could use it to see shifts in supply and demand before other traders do, and how you can profit from the different types of buying and selling in the market. It's not all just certain types of buying. There's markets turn at certain points because there's stopping volume, there's heavy sellers, and I'm going to teach you how to see that in the market and in the order flow. And I'm going to talk about today the importance of the different types of market participants. Everyone always says, oh, you got to follow the big money. Well, honestly, it's very difficult now, when it's trading electronically, trading on a screen, to see what the big traders are doing. That's the benefit of order flow. It leaves, the big traders leave a footprint of their trades. So once they trade, you can see that information. So if you stick around to the end, I have a special gift for you. It's my book on trading order flow. It's 150 pages. Since a few years ago, I sat down and I wanted to put down basically all my knowledge. Well, hopefully, I like to think my knowledge is more than 150 pages, but particularly on order flow in the market. So if you stick around, I'll show you at the end, how you could get that for free. I'm sure there's probably some people here that are new to order flow and are not yet convinced really, its importance to trading. But it's something that can transform your trading. I've been fortunate to work with some traders, and I've really turned their trading around by showing them how to use order flow. So, who am I? Like I said, my name is Michael Valtos. Renee sort of read a short bio about me, but just recently, I was a vice president of futures trading at JP Morgan for 8 years. I was a futures trader at Commerce Bank, Cargill, EDF Man, and before that I started on the CME floor. That was back in 1994. So what I'm going to show you today, these are the exact trading methods I used while trading at JP Morgan, Cargill, and other firms over the years. I said I started in 94, it's 2017, and the whole industry has changed, right? I started order flows in 2015, and what it is, it's a software. It runs on NinjaTrader and Sierra charts. It's an order flow volume footprint chart, and there's additional tools that we created to help traders learn, analyze, and trade order flow the way institutional traders do. Okay, so this is my first, I say not my first, this is my second paycheck that I ever earned in the futures industry. I was working on the floor for Dean Witter. I made, I think it was $5.25 an hour or something like that. It was a 2-week paycheck. I made a grand total of $272.60. That was in the days when it was easy. If you want to learn how to trade, you could just go down to the floor, get a job. Everything's changed. It's all electronic now. And honestly, unless you have a mathematical degree or a programming degree from Princeton or MIT, a lot of firms don't want to talk to you. Forget about, just learning how to trade from someone that has experience trading on the trading floor, because trading floors don't exist. There isn't that that training ground for people nowadays. Now it's very difficult. So you got to ask yourself, who do you want to learn trading from? Do you want someone that says, oh, I'm self-taught, I use all these indicators, or someone that actually did it, right? Like I said, I've worked at these big firms. This is what I did to pay my bills. I'm not saying it all to brag or anything, but I just want you to understand my background. So hopefully you can understand that what I'm talking about is what professional traders use in their analysis. Now, before I get started, a brief disclaimer: this is not my lawyer, but I love that lawyer from The Simpsons. He can be a great lawyer in real life. This presentation is for educational and informational purposes only and should not be considered a solicitation to buy or sell a futures contract or make any other type of investment decision. Futures trading contains substantial risk and is not for every investor. An investor could potentially lose all or more than the initial investment. Risk capital is money that can be lost without jeopardizing one's financial security or lifestyle. Only risk capital should be used for trading, and only those with sufficient risk capital should consider trading. Past performance is not necessarily indicative of future results. Now, the reason why I say a disclaimer, right, before I start anything is if that weeds away, those traders that aren't serious, I don't want to call them traders, the people that aren't serious about trading, that think trading is some easy method to get rich quick, that you see people posting Ferraris and private jets on Instagram. That's it's not going to happen in a week or two. Yeah, you can make a lot of money and you could make a very comfortable living trading, but I just want a reality check. Sometimes for people, they never get trading. They just lose all their money. Keep that in mind. It could happen. Hopefully not. Hopefully what I teach you today is something that you could use in your trading to help you, get you, break the plane in the end zone, score the touchdown, put the ball in the back of the net if you're a soccer fan. Because I deal with a lot of people that are very close. They're just there breaking even, spinning their wheels. They just need that one extra tool, and order flow oftentimes is that tool. And what I'll be talking about today is the delta in order flow and how it can help your trading quickly. Get from point A to point B now, rather than sit there in the dark over the next year and, spinning your wheels and breaking even for the next year or two. No, there are tools out there, if you open your mind to them. And honestly, after a while, it really becomes second nature. So if you've been interested in the markets or trading for any period of time, I'm sure by now you've heard of order flow, right? A lot of people think it's the latest fad. It's actually not. Order flow has been around for over 100 years at a minimum. You look at pictures from the 1930s, there's guys sitting around reading the ticker tape, right? That is order flow. In the past, it was called trading the tape. And now with the advent of computers and the way they process the data, spit it out, it's changed into the term order flow. So order flow is the way traders' orders are executed in the market when they're transacted, when they're, quote, flowing into the market, hence the term order flow. So you have your trading front end, it's a NinjaTrader 7 front end. You click buy. If you're buying it at the offer, it will show up, it will print as, on the left side, on the right side of the bar. If you sell into the bid, it'll show up on the left side. And over time, a chart develops, right? Over time, a more clearer picture of the market is forming. And there's a lot of numbers. Honestly, a lot of people get scared by looking at a footprint chart because oh, I got to understand all these numbers. No, you don't, right? There's three building blocks with order flow that you got to focus on. Point of control, imbalances, and delta. Point of control is the point of the bar that has the most volume. Imbalances is when one side, either the bid or the offer, is certain percentage greater than the other, right? Usually it's about 400%, 4 times as greater volume traded on the offer as opposed to the bid, or vice versa. And delta, which is what I'll be talking about today. Delta usually runs along the bottom, and it's the difference, the net difference of aggressive buyers and aggressive sellers. Okay, so just really quick, so you can understand what I'm talking about. If you're new to order flow, if you are, this may help you out a little bit. The market is a two-way auction, right? There's a bid and there's an offer. So in this case, it's market's 1913.25 bid, 1913.50 offer. There's 280 on the bid. It's 565 on the offer. So when you come in and you buy the offer, you buy one lot at 1913 and a half, you are an aggressive buyer. If you come into the market and you sell at the bid price, you sell at the market, you sell one lot at 1913 and a quarter, you are termed an aggressive seller. Now, if you want to buy it at 1913 and a quarter, you join the bid. You're going to be a passive buyer. If you work in order on the offer, if you want to sell it at 1913 and a half instead of 1913 and a quarter, right, you're willing to wait, then you're a passive seller. Delta measures the aggressiveness of traders. So how does it register, on a chart? Well, when someone buys the offer price, right, so someone comes in, buys it at the market, they buy the offer, 1913.50, delta registers as +1. When someone comes in and sells at the bid price, they sell at the market, they hit the bid, they sell one at 1913 and a quarter, it registers as -1. Delta doesn't take into account passive buyers and passive sellers. It takes into account the aggressiveness of traders. So how does it look on a footprint chart? Well, it's usually displayed on the bottom of a order flow footprint chart. Some software, it'll print in the chart itself rather than on the bottom. And there are different types of delta readings. So you can see down here, this arrow, this is the delta, the top line. Second line is max delta, min delta, cumulative delta, and the volume for the bar. And the delta number is for each bar. All these readings are for each bar that's forming, okay? So delta is the first line, the first number here on this chart. Okay, that's the either positive or negative for the bar when it finished, right? So it's the net aggressive buying or net aggressive selling when the bar finished. So if it's +2, you know, in this case, okay, -2 right here on this low, that means there was 2 more aggressive sellers than there were aggressive buyers. If it's +21, as in the next bar, then you have 21 more aggressive buyers than sellers. Okay, so the next one, max delta, it's the most positive delta was in the bar ever, in that particular bar. The min delta is the opposite. It's the most negative delta was in the bar. And why is that important? Well, in general, it's, you know, markets exist to facilitate trade, and most of the time it's not going to matter. But there are times, you know, where a bar could just be all max delta, no net selling ever in the bar, or it could be all net negative delta, meaning all min delta. And you know, there's other ways to interpret that, the max delta and the min deltas as well. But I don't have time to get into all that today. But you know, if you're interested in it, you know, I'd be happy to explain it. Cumulative delta is the running delta for the day. Okay, so you know, it's like a, I don't know what you want to call it, a moving average, not even a moving average, but you know, it takes the bar and you know, either adds it or subtracts it from whatever the total was so far. Now that I know there's people, they like to look at it when it flips. You know, so you got like down here towards the end of the bar, you can see it's all red, then it turns green down here. It's the second line from the bottom. So they're saying, oh, you know what? Now you know the psychology of the market shifted. You have net aggressive buying coming in, and they'll look to get long. Honestly, I don't use cumulative delta that much. I stick with delta, max delta, min delta. Order flow delta shows you hidden strength and weakness in the market. You know, this is a great way to see when buyers or sellers are dominating, right? The second point. And it's going to give you market generated turning points. It's going to also show you if prices are being supported or defended. You know, on a move up, if there's supported buying, or on a move down, if there's, I don't know, I can't think of the term off the top of my head, but it's like resistance, but you know, moving on the way down, holding the market down. And there's other things it tells you, you know, and this information, this knowledge is not available on a normal bar or candlestick chart. The information is there, right? It's there for everybody. The exchange puts it out, but if you're not using software that can read it, you know, you don't have the full picture of what's actually happening in the market. So, you know, in the old days, you know, people, you know, when I was in the early years of trading, you know, on the floor, people would call down to the floor, you know, hey, why is the market up? And they'll say, well, there's more buyers than sellers. Well, that's not true. Actually, what you have is just more aggressive buyers than sellers. You have more aggressive ones, or if the market's going down, you got more aggressive selling than buying. And what does that mean? Because that's going to show you the shift in supply and demand. And you know, what and who moves the market? Well, it's the supply and demand driven by the big players. Remember, it's the law of supply and demand. If you've ever taken an economic class in university, the teachers, they teach it as the law of supply and demand. It's not the theory of supply and demand, like, oh, it may work. No, it's the law, right? It's how prices move. It's how commodities trade. It's how, you know, people do business. It's the law of supply and demand, not the theory. So, you know, who are the big players? When I talk about, you know, the big players being in the market, you know, everyone says, oh, you got to follow the big money, the big players. Well, who are they? You know, it's not like the guy that trades 20 lots. No, it's the commodity trading firms that, you know, have the, you know, the wells and have the plants in the ground and doing the harvesting and shipping it all around the world. You know, they're the big players. It's the asset managers, you know, the real money accounts, you know, the pension funds, the, you know, sovereign wealth funds around the world, central banks even. You know, and the hedge fund portfolio managers now, I mean, you know, in the past, I probably wouldn't have included hedge fund portfolio managers, but now hedge funds are so big, you know, you're talking in the billions of dollars that, you know, their movements, they really blow out volatility a lot. Now, sometimes they're passive, other times they're aggressive, right? And, you know, sometimes it's hard to tell you. I mean, it's not all going to be, you know, you can't say all asset managers are going to be passive. Sometimes they're aggressive and vice versa. So what does a shift in supply and demand look like? Well, when the market's moving down, you have a supply-driven market, right? People have a lot to offer out, and prices are going to move lower. When prices move higher, generally it's driven by demand, right? People want to buy stuff, there's demand for it. You know, whether it's Japanese yen, whether it's mini S&Ps, whether it's milk, or whether it's, you know, winter coats during the year, right? There's all different supply and demand. So, you know, looking at an order flow chart, well, how can you tell, you know, when it's shifting? Well, if you look at delta, right? Like here on this move down and then the move up, right? What do you have on these, the 4 bars here right around the low? You got a negative delta of 170, a negative delta of 122, so it's getting less. And then you hit your low, it's positive delta of 36. So you went strong negative delta, progressively weak negative delta, and then down here on the low, right? You're at your low, you should be seeing negative delta, right? Because you should have, you're going into your low, you should have net negative selling. Instead, you got net aggressive buying coming in. Okay, that should, you know, raise your spider senses. And then, you know, next bar, strong positive delta. So now, you know, it's gone from a supply-driven market. You know, you can see the supply getting weaker, and all of a sudden demand is getting stronger, right? You've come down in here, the supply is getting weaker, negative deltas are getting weaker. And then down turns, you got aggressive buying coming in a bit on the low, then next bar off the low, boom, strong positive delta, and the market goes higher. So, you know, there's different types of buyers and sellers in the market, right? There's passive and aggressive participants. I've explained it, right? Who are aggressive participants? Well, it's traders who are getting in now, right? Who are the passive participants? You know, it's traders who let the market come to them. So, you know, put it in real life terms. You know, a simple way to understand it is, you go to buy a car, right? You want to buy a new BMW, right? The price is $60,000. You don't want to pay $60,000. You want to pay $50,000. The dealer knows that this new car is in demand. He's going to stay there at $60,000. Problem is, you only want to pay $50,000, so no trade is going to happen. You know, you can't buy that car for $50,000, and he's not going to sell the car at $50,000. So if you want that car, you have to go up. You have to be aggressive, right? You got to pay $60,000. You got to pay the offer. Now, if the car dealer knows that, oh gosh, you know, next week I've got another 70 of these cars coming in, and you don't have the whole lot flooded, you know, demand may not be there anymore because it's not such a, you know, the supply isn't so tight that, hey, I got to sell this, you know, and I'll be willing to lower my price down to 50. So he hits your bid, he hits you at 50. So the car dealer in that case is the aggressive seller. You are the passive buyer because you are happy to wait for him to come to your price. So, you know, that's an easy way to understand aggressive and passive participants. Now, in general, markets move up on aggressive buying. Generally, markets move down on aggressive selling. When I say generally, it's because, you know, I'm going to show you examples where sometimes it doesn't, okay? And again, you know, that's the beauty of order flow. You can see why that's happening, and more importantly, how it's happening. Now, moves up, right? The market moves up, and generally they stop when they are met with passive sellers, and moves down stop when they are met with passive buyers. Again, not always, but oftentimes they do. And what that means, the market moves up, stop when they're met with passive sellers is, you know, market is moving up, 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 up. Then you got a big seller up, you know, at you know, at a higher level that all the buying comes in and just runs right up into it. And, you know, the seller's got so much inventory up there, he's just happy to offer it out all day long there. And then, you know, the buyers lose interest and the market sells off. Market moves down, stop when they're met with passive buyers when, you know, there's a big bid there, a solid bid that, you know, the selling, you know, people sell, trying to get the market lower, then they realize, hey, you know, this market's not going lower anymore, and then they start covering back and the market goes higher because it sort of ran into this floor. Now, as an example, market's moving up on aggressive buying, right? You're coming down into your low, again, you got negative delta 474, 390, and then on the low 16, then 112, 184, 167, 372. You see how the market's moving up. Now, I'll be honest, not all the time it's as clear as this. You know, sometimes, you know, it is. Honestly, sometimes it is, and this is the benefit of it, right? It's not like you're going to pick every single high or low, and it's not about picking highs or lows. It's about reading what the market is presenting to you. You know, the market is telling you, hey, this is happening. You know, do something. But again, you know, not every high or every low is going to be like that. But you know, sometimes they are, and oftentimes, almost every day, you get something like this, either at a high or at a low, a swing high or a swing low. Markets move down on aggressive selling. Again, you know, you rallied up here, right? You went up, quite nice move, but then you just go sideways. But look at this move sideways. You know, after this move up, you're going sideways in here. All negative deltas, all red down here. 620, 314 negative, 620 negative, 314 negative, 148 negative 51. Got a small positive, 30, then negative 37. Finally, it picks up again, 253. You know, so people were buying. You know, the market was moving up. It gets up to this high level. Sellers come in, but there's still buyers, right? There's still people happy, you know, trying to buy it, thinking the market's going to go higher, and there's sellers selling into these guys. That's why you got the negative deltas, because people are selling into their bids. So people are supporting this market, right? So two things are going to happen. One, the sellers are either going to get tired of selling, or you know, have no more supply to sell, or the buyers dry up. And in this case, the buyers dried up and the sellers took over, and boom, you sold off. Now, moves up stop when they're met with passive sellers. Again, this one doesn't happen all the time, but sometimes it does happen, and it's so obvious if you're looking at order flow that you know you'll just kick yourself and wonder, why haven't I been using order flow all these years when it's been available to me? And all this information, you don't need special level 2 data. Just level 1 data is it's put out by the exchange. You know, and if you're not using it, really you're just leaving money on the table. So the market rallies up, boom, boom, boom. You get the high. This green line is the high. You got a new high up here, and you can see you got positive delta on the high. Okay, that's great, but you should be going higher with positive delta, not lower. It's a red candle. Price action of the bar is telling you the bar closed lower than where it opened. And if you look at the order flow inside here, the volume rather, you can see up here at the high, 115, okay? At the top of any of these other bars, do you see any volume like that? No, the average volume at the top of one of these bars is somewhere between, you know, 20 to 30. You know, you got, you know, here's 80, here's 61, but, you know, everything else is like 9, 16, 14, you know, 54, 23, 30, you know, but you got some, you know, some decent size up here, I guess you'd call it decent size. This is the Japanese yen that's holding this market down. And you can see how the market sold off, right? I did earlier last month a presentation about the point of control being at the high, and this is also an example. But again, you know, watch the delta. You're going up into the highs, 216, 139, 101. So it's getting weaker. Then it turns, it starts trading lower, 47, minus 154, minus 204. As it's going lower, you know, again, you could just pick that up really quick just by looking at the delta. Now here's a case where, you know, moves down stop when they're met with passive buyers. This is soybeans, you know, selling off, negative delta, boom, right on the low, strong negative delta. Look at that, minus 1400. And if you look at the volume that traded there, you can see it on the footprint chart, 1759. That's huge for soybeans. There's a strong bid down there, whether it's one person, whether it's a group of people, doesn't matter. You can see that. And you see you got that strong negative delta, 1466. You're thinking, shit, man, this market, we should be breaking off, you know, from 950. We should go all the way down to 945 immediately. But it's holding the market. It's supporting that market. Then the market rallies back up off of that. Again, you know, this is information that's available to every trader, but not everybody is using it. If you don't use a footprint chart, then you're missing out on that information. So again, you know, this is an important slide. You know, if there's one thing you can take a screenshot of, I'd take this slide. So let me explain the importance of different types of market participants. So you have passive buying near lows is a sign of price support. Passive selling near highs is a sign of price resistance. So passive buying near price lows is a sign of price support because you have big buyers down there. You have big bidders, people working bids in the market down there at that low to hold that low to support the market so it doesn't go any lower. Passive selling, the opposite. You have big offers at a high where people are happy to sell all day. They got a lot of supply. They're happy to sell it at those prices. That's resistance. Now, the opposite, you know, aggressive buying near lows is a shift, is a sign of a shift from a supply-driven market to a demand-driven market. What you're seeing now is demand coming into the market. You're seeing it in the form of aggressive buying. You know, people buying the offer. They want to get long. They want the market to go higher. Aggressive selling near highs is a sign of a shift from a demand-driven market. The market was going up on demand. All of a sudden, you got aggressive selling going on near the highs. It's a sign that supply is coming to the market, and oftentimes you should go lower. Now, this is not all set in stone. If there's passive buying near lows and price still goes lower, I don't want you to come back. Oh, Mike said, it's this. No, it's not. I mean, use your common sense when you look at that. Yeah, you can break through an area of passive buying or passive selling. I mean, and then break, forever. That happens sometimes in the markets. I mean, those are support and resistance levels. But generally, when it happens, it's a sign of passive buying near lows is support, and passive selling near highs is price resistance. So how can you tell what the big players are doing in the market? Remember what I said earlier, hey, there's never more buyers than sellers. There's just aggressive ones. So this is the beauty of order flow and of delta. So if you knew there was aggressive selling going on, what would that be worth to you? If there's aggressive selling on, you should be thinking the market should be moving lower. Now take it a step further. What if you knew that there's aggressive selling going on at a high, right? You're at a high and you have aggressive selling going on. It's telling you the market's rallied, it got to a level and it's drawn in sellers. And when you get aggressive selling dominating over aggressive buying, the market should go lower. So like I said, these things happen every day. I haven't been able to, I didn't put today's charts in there, but this was yesterday in the E-minis, right after the cash open. And we hit our high just right before the cash open. Then as cash open, strong selling coming in over these bars here. You've got, you've got minus delta of negative delta of 1808, negative 1487, positive delta of 1000, but then again, negative 1984, negative 1612. So you're at your high, and it's predominantly negative delta, predominantly negative aggressive selling going on. So that should be a sign to you that this market can sell off. And then what happens? This is 840 already. A little bit later, 845, the move happens. It sells off from 2472.5 down to 2468.5. And I know what you're thinking. Well, okay, wow, it's a big 4-point move. So what? But this is at a time when the day's range, you're talking 2467 3/4 to 2474.5. It's only 6 3/4, 6.75 points. So 6 3/4. And you're talking about a move of 4 points. So there's not much opportunity for any big moves in here. These are in a tight range, but here's a move you could have taken advantage of to at least get minimum of 2, maybe 3 or 4 points out of it. Soybeans yesterday, it's a great market, I think, for trading. I think soybeans up until electronic trading really took off in the late 90s. I made the most millionaires in the world is the market. But it's a market that's driven by supply and demand. Now, whether it's soybeans, whether it's euro currency, whether it's crude oil or minis, mini Dow, the same things you're looking at across all the markets, right? And at this low, swing low, just after the reopen at 8:30, we're coming down. Negative delta, minus 316, minus 179. You got strong, aggressive buying, positive 746 in the delta. But then it follows up with a nice positive delta afterwards, and you move up from 961 all the way up to 967. You get up to the swing high on this move up here in this box, right? The delta, positive delta 366, positive delta 278, positive delta 180, positive delta on the high of just 4. So it's going higher, but the net aggressive buying is drying up. It's not as strong as it was earlier. It's gotten weaker. And then what happens after you make the turn at the high? Negative delta, minus 118. Next bar, strong negative delta, minus 208. And the market sells off. Again, it sells off from 966, 965, all the way down to 962, over the next few minutes. See a nice move up, then a nice move down there. So again, how can you tell a shift in supply and demand? Well, here you got this move up here, And then you got the move down. Well, if you're watching the delta, you can see how it's changing. You got the negative, you got the positive delta on the way up, but it's getting weaker, 582, 187, 146. Then it transitions into negative delta, minus 187, minus 525, minus 460, and the market just sells off. And then, here's another example, negative delta at the high. You've got, right at your high, you got your strong negative delta, minus 2,500. Next bar, minus 2,800, and the market sells off. I mean, this stuff happens daily in these charts. So another example, this is something I was talking about. It can show hidden things in the market. This is a market that's going higher on negative delta. People say, well, how can the market go higher on net aggressive selling? Well, it can when you have passive buying coming in supporting the market on the way up. So you see these arrows, right? All these bars have negative delta, and it's quite strong. Some of these bars 2,000, 1,500. You got strong bids in here, 1,859, 4,260, 2,000, 5,000, 2,600, 2,900, 2,700, 2,800. All strong supportive buying on the way up. Okay, and that's how a market can go up on negative delta, because you got strong buyers coming in. They're absorbing everything that's being sold to them and still bidding higher. That's how it can go up. So by now you should see how, why is delta so effective? Well, delta clues you in to changes in supply and demand. Again, this information was only available on an order flow footprint chart, and it doesn't appear on a normal bar chart. But now I'm going to show you a way you can get delta on your bar chart, and also another way you can have it analyzed for you. The delta candles, is a tool that we created to give a trader a visual representation of delta. The mind processes images 60,000 times faster than text. Okay, MIT researchers discovered that the human brain can interpret images that the eye sees in just 13 milliseconds. That's pretty fast, right? Imagine you can look at a picture and understand what's happening a lot faster than reading text or reading numbers. So the delta candles takes this information, the delta, and turns it into a visual format. Most people are familiar with candlestick charts, and that's what we set out to do. We set out to take this information and put it into a visual format so you can make the analysis a lot easier. And the delta candles are similar to your normal candlestick charts. There's an open, which is 0 in the delta. That's when the bar opens. The bar opens with 0 delta. There's a high, which is the max delta. There's a low, which is the min delta. And there's a close, which is the delta. Patterns do appear in delta candles just as they appear in normal candlestick charts. I've even created a special delta candles cheat sheet. So, you can see there's different patterns, which, some are bearish, some are bullish. So you're taking, order flow information and putting it into a visual format that makes it so much easier. This is an example. This is a delta hammer, right? This is this sign right here, this bullish. Right here, down here, boom, and what happened? You got a nice move up. Again, these things happen daily, day in, day out in pretty much every single market. So the other tool I want to talk about is this tool called the Delta Scalper, and it's designed to alert the trader to changes in supply and demand by reading the delta. So again, while the brain processes images in 13 milliseconds, which is pretty fast, the computer will process the data as it happens instantly. So imagine you can, everyone talks about low latency trading engines. You got to be next to the exchange. This takes it a step back, right? It takes it off your brain and puts it onto the computer actually. So you don't even have the reaction time. And this is what it does, right? You can draw these areas, boom, sell up here, buy down here, sell up here, just by reading and analyzing the delta for you. Now, if you're not an order flow trader, don't worry, I got your back, right? I understand, not a lot of people, when they first are introduced to order flow, really understand it, right? And that's fine. Sometimes it takes a while for people to get their head around it. But when we created Delta Candles, Delta Scalper, one of the requirements was I wanted to be able to put it on a normal bar chart. Sometimes I have a lot of charts open, and I have actually just bar charts running with the Delta Candles and Delta Scalper because I'm a visual person, right? It's all about Instagram these days, Facebook, Pinterest, looking at images. And sometimes it's a bit easier. I don't want to be looking at 50 different domes, depth of markets. It's just easier for me to look at a simple bar chart. And if I'm interested, then I'll look at the footprint chart. So again, this is how it looks. Delta candles on the bottom, Delta Scalper in the bar chart. So you could use your existing chart, whether it's a candlestick chart, whether it's a, a Renko chart, whether it's, just a normal open, high, low, close bar chart. So hopefully by now you can see how powerful delta analysis is. Okay, and I've just shown you a few examples how to use order flow delta. I mean, again, I could talk about this all day long. I could talk about it for hours, and I do sometimes. I have a trading room, and I explain what's going on in the trading room, in real time for people. If there's nothing happening, there's nothing to talk about, I don't say anything. But when there's interesting things, I talk about it. I'm a big believer in keeping it simple. Traders nowadays, they like to overcomplicate things. They throw 20 different indicators on a chart, and hopefully one of them is right. And then they'll say, "Oh, you see this indicator, pick the move." That's not trading. Understanding what's happening in the market is trading, right? That's what trading is. And order flow delta is about as simple as it can get for a trader. So there's a quote that I like. It's attributed to a lot of people. It's called, it says, Derek Bach is the old Harvard president, is most person that's usually attributed to, but I've seen it attributed to Benjamin Franklin. If you think education is expensive, try ignorance. Like I said, I created Delta Order Flows Trader, which has generates these charts that you just looked at, and honestly, we do sell it. And sometimes people say, "Oh, it's so expensive." Well, think about not looking at that information. Think about not using that in your trading. You're leaving, I said, a lot of money on the table. So I tell people, stop flushing your money down the toilet trying to find the Holy Grail. It doesn't exist. Okay, just learn how to trade. Everyone wants to have the latest shiny indicator. Just learn how to trade. Read the order flow. It doesn't get any simpler than that. So how can order flow trading help you? Well, it's a skill set, right? That once you learn it and internalize it, it becomes second nature, and you'll be anticipating what can happen in the market based on what's currently happening right now. You can read what's going to happen in the market. It's just like driving a car, right? You internalize how to drive a car. If someone's about to cut you off, you don't say, "Wait, let me look at my manual on how to drive." No, you know what to do now because you're so used to it. But again, it's really up to you. I can't put a gun to your head and say, you have to learn it this way. You have to want to learn, right? A little bit back story of me. I've been in the futures business for 20 years, right? I was managing a grocery store before, and money was decent. That was when I was 20. I was 21, making 30, 35,000 a year. I thought, hey, that's great. I thought there was a lot of money, but I had to make a decision. Is that what I want to be doing for the rest of my life, or do I want to become a trader? I was always interested in trading. So I got a job on the CME floor. I made $5.25 an hour, but now the floors don't exist, right? It's hard to get into trading unless, like I said, unless you got a advanced degree in mathematics or computer programming. You can't get your foot in the door at banks or hedge funds or many other places. So it's very difficult. You can open up a trading account, but if you don't know how to trade, what's the point? You're just going to piss away your money. So everything I talked about for the last 40 minutes will be completely useless, right? If you just go back to your old habits of doing what doesn't work, or just stumble around trying to learn everything for yourself, or just finish watching this presentation and do nothing. Okay, but if that's how you are, then okay. I mean, that's fine. I said, but if you want to break out the old habit, if you want to learn how to trade, I'm offering you tools to get to the next trading level. So if I can have your permission, I want to show you how you can add order flow and delta analysis to your trading. So I created what I call the I'm all in package. Like I said, you can't go down to the floor, because there's no trading floors anymore to learn how to trade, and learn from experienced traders, right? You have to go to people that you resonate with, people that you understand how they trade, and you think, hey, I want to learn that, not everybody's going to pick up order flow. I'll be honest with you. Some people just don't, and that's fine. Everyone, you have to trade a way that you're comfortable with. You can't be successful at something if it's something you don't understand or you don't want to learn. But I created this all-in package, for those that really want to take it to the next level, right? It's your springboard to trading with order flow. And honestly, once you understand what's happening in the market, you'll understand trading will just make sense to you. So, what I have, right, is the Order Flows Trader software, and it runs on NinjaTrader 7 or NinjaTrader 8. You also have a Sierra Charts version. Just email me. It's a volume footprint chart with 4 pre-programmed order flow analysis tools, and you get my chart template, right? So you don't have to dick around trying to set up your trading charts. You just load the template, boom, your charts look just like what the charts I showed you. But having order flow software is one thing. You have to know how to use it, right? I don't just give you the software and send you on your way. I provide a lot of education on how to trade with order flow. Now, you know, I've spent a lot of money on software for other things, not trading. And sometimes, you know, the documentation, how to use it, you know, what to do, what to click, is just not there. And sometimes, you know, I feel shortchanged because, you know, I'm not using the software to the best of my abilities. But, you know, excuse me, I want you to know what to look at in order flow. So I'm going to give you access for free to a trading course that I created. I sell this for $297. It's 15 hours of video instruction on trading order flow, 20 different lessons. I'm also going to give you the Delta Scalper. All right, it's normally I sell it for $250. I sold a copy earlier today for $250, but I'm going to give it to you when in this package. So you can read, you know, you can take trades based on Delta without, you know, for now until you understand what's happening. And the Delta candles, you know, it's something I only provide to my inner circle now. I used to sell it, it was $200, and it makes reading the Delta easier. I'll also throw in the cheat sheet so you know what formations to look for, what patterns to look for. So normally I sell the order flows trader for $899, the course $297, Delta Scalper for $250, the Delta candles for $200. That's already $1,646, right? And you know, I don't have a slide in here, but I also give you access to my trading room so you can come in and listen to me talk about the markets 3 days a week, you know, if you have time. And as a special bonus, I got 3 other indicators which I'll give you for free. It's only for NT7 though. In the share charts, it's not ready yet for NT8. And you know, normally I sell these tools for $650. You can get it for free over the next couple of days. This is what it looks like. You know, this is a mini Dow 100 tick chart. You know, some nice quick hits. You know, sells, 2 sells, quick buy. And how much is all this going to cost you? It's just going to cost you $999. Yeah, people say, well, that's a lot of money, but you know, honestly, it's not. Right? Money comes, money goes. Right? You can spend the money now, and you know, in the future, you can get it back. Right? But honestly, you know, if $999, you know, that's $3 a day over the course of the year. If $3 a day is too much for you, you probably got more serious issues and you should honestly be considered trading. I know that sounds harsh, but it's reality. You know, there's no monthly payments. I'm not going to come back to you next month with a charge for another $200, $300. No, there's no other payments in the futures. Put it in perspective, what else can you spend $999 on? Well, you get this folding electric bike. It's kind of cool. You know, you can save the planet, save, you know, lower your carbon footprint, I guess, unless electric, how that works. But, you know, it's all about taking action. So, you know, I'll put the link in the chat. You know, it's orderflows.com/allin. So what you do is you go there, right? And it takes you to this web page. You just scroll down to the bottom, and it takes you to this button. I mean, you can read the page. There's a lot of charts and some examples. You know, join. I'm all in. And it takes you to PayPal. PayPal processes it. I don't get your credit card information. I don't want it. They process the billing and all that. And, you know, later it takes a couple hours for everything to get processed and set up, you know, with the trading course and everything, trading room. That I'll email to you within a few hours. Now, you know, if you stuck around, you want my trading book, trading order flow, email me, Mike at Order Flows with the subject line, send me your book. And but the most important thing is, you know, you got to act, right? I mean, it's one thing to watch these presentations, but it's another thing to take action on them, you know? If, you know, I've got a YouTube channel, I got a lot of videos. You know, this week I haven't posted any videos, but you know, usually I post about 1 or 2 videos a day during the week. You know, this is what people are saying, you know, lots of detailed, best daily order flow analysis. Yet, you know, folks that don't see the value in what you're sharing are simply missing the point. The positives that are put on the table are massively valuable for any traders willing to learn as a career and not a casino hit. So again, you know, it's all about taking action, right? You got to go now to orderflows.com/allin. And you know, you can say, if I got a website, you can learn a lot about order flow. You know, nowadays, honestly, I do most of my posting on YouTube, making videos rather than you know, writing. I just find it easier to talk about the markets, even though sometimes my voice sounds a bit monotone. But you know, it's not about, you know, how I sound. It's about the information that's being given. I know nowadays people don't really read blogs so much. It's all about video, and even Facebook is saying they're going to video these days. So, hopefully, if you want to take your trading to the next level, you can. Just go to orderflows.com/allin.